Well, defensive sectors definitely outperformed last week, and volatility looks like it's poking its little head out. We got a lot to talk about on today's episode, but I'm going to try to keep it condensed as possible. You're watching the Stock Market Brief Show. My name is Michael Silva. This is a weekly recap. Let's get into today's show. So yes, the jobs report disappoints. Only 235,000 positions added versus the expectations of 720. Probably the worst jobs report, if not the worst in a long, long time. What happened to the market? Well, the dollar continues to break down from this trend line. Now, this is interesting. When the dollar falls, we typically see the S&P 500 and other risk-on assets start to rise, including even commodities. And when we broke down through this trend, which we were watching closely, if we broke that trend, we can see more selling. And if you just overlay, we'll just overlay this little white line right here, and you can see here, well, ever since the dollar broke out and then just quickly bull trapped people and then started reversing, well, the S&P 500 started rallying higher. Now the question is, okay, well, we kind of ran into this 91.75 support, right? Acted support here, it acted as support here, it's kind of acting as support here. Are we going to start bouncing from this level where perhaps this is the week that we might see the S&P 500 roll itself over a little bit and find another area of support? If that's the case, well, then we got to map out those areas of support. We've talked about them on previous episodes, but we're going to reiterate those areas of support here in today's episode. Now, also, take a look at the NIMOT. This is the Nasdaq oscillator. It did get into just about an overbought area here, and it's kind of heading down. We had an inside trading day on the NIA, that's just ticker symbol NYA. That's the NYSE, New York Stock Exchange. And that sometimes suggests when we get into these overextended areas, even on negative divergences, we see the market pull back slightly, but we'll keep an eye on that. Also to note, 10-year yield on Friday jumped up 2.16%. So a pretty aggressive move there, but still it's rather in bearish context. Now, if this continues to rise, that can put pressure on big tech stocks, and big tech stocks, they've been a strong performer overall. One thing we can look at is week performance, this last week's performance, and you can see here up which is the top four sectors, they're all defensive, right? We have real estate, healthcare, which we talked about in the last weekly recap episode. Consumer staples and utilities all led the way. Meanwhile, cyclical names like materials, energy, financials, even industrials were the laggards of this last prior performance. And then we have some growth stocks just right here in the middle of the pack. If we take a look at the sectors via candle form here, let's quickly look. So XLY, consumer discretionary, put in a nice little hammer candle as it's kind of floating around its all-time highs right here. So maybe perhaps we get a follow-through bounce on that. That's always a possibility. Communication services, also a little bit of a hammer candle as it's pulling down. It's a little overextended from the 20-day moving average, so sometimes they pull back and then they find support in those areas, so that's something to watch. XLK, technology, has been trading sideways as pretty much the entire week here, you can see, but it finished up on the day slightly on Friday. Industrials has been really range bound too. It's still above the 20-day moving average, so that's good. Materials, we talked about this hammer candle. We bounced up from it, had some follow through, but it kind of reverted with an increased amount of volume coming into the downside here. So that's something to watch, this increased volume that we haven't seen for quite some time. It is still above some key levels of support. So if we start getting above 86, back above there, that could be actually a good sign. But as it stands right now, it's kind of just on, red flag, high alert there. Energy has been probably one of the worst performing. I believe it is actually the worst performing here in the last couple of months of trading. And you can see here it's below the 50 and just hovering right at the 20-day moving average. It looks like it's trying to get some support. We'll talk about oil here in just a moment. Consumer staples, you can see, also putting a hammer candle still above the 20-day moving average, and their spread between the moving averages are pretty nicely too as well. And then healthcare, it's been ticking up, but it's been so on decreasing volume. Meanwhile, when it fell, it was in an increasing volume. So that's maybe something to watch. It's very short term, but the trend still remains very bullish. Financials is right around 38, pretty weak overall. It was actually the worst performing sector. However, I'm starting to see a lot of good financial setups here. And if energy start catching a bit, if oil starts catching a bit, financials will probably start moving up too. What I find interesting about this is the 10-year yield was rising, right? And that typically benefits financials. So perhaps this is lagging that move to the upside, or potentially the 10-year yield is going to revert back down, which is always obviously a possibility. Utilities, nice week overall, up over a percentage point on the week, but on Friday took a little bit of a hit to the downside, but still an overall bullish context. And then real estate, really some big volume coming in there. Many real estate stocks that look very strong. But these put in 2 little hammer candles right here, so they were bearish, and then the bulls bought them right back up. So we'll see if we get some continued movement to the upside. I'd like to see this digest a little bit or go sideways a little bit before continuing to look for more setups there. WTIC, so crude oil. Crude oil inside trading day, it was down 1% on Friday. This is still one to watch if we start getting above the high of this previous trading day, which is at 70.53. Maybe it's just called 76 or even back above the 50-day moving average, right around there. That to me would be a very bullish sign because that's just an inside trading day. Now the candle itself doesn't look too good on a big move up like this. Typically you need to see a digestion take place, bounce, and then continue to move. And if this is the case, if oil starts getting bid higher, obviously the energy sector is going to start performing too as well, breaking out of some bases. And then also something to watch very closely is the financials. Now, if you take a look at the weekly time frame, this was a nice big bullish engulfing candle followed through by a higher high and a higher low. The candle on the weekly time frame for oil, though, is an indecision candle. This is a doji candle, so it's important to watch how the next week develops, right? So this could be a bearish pattern, right? If we just get a big red candle to the downside, then it's bearish. But we got to be patient here. Right now, it's saying, okay, do I want to go higher? I'm kind of undecided. That's what that chart says. S&P 500. Oh, but also to note, it's back above the 20-day moving average, right? Or 20-week moving average, and it's above the other key moving averages. So, it's in bullish context on the weekly time frame. You have a high, higher high, higher high, a low, a higher low, a higher low. So overall, it's in bullish context. So the benefit goes to the bulls right here. S&P 500. Now we're going to map out some key levels here. I want you to pay attention to the monthly 5 EMA. That's 4383, right? We haven't had a reconnect yet. So if we do get a reconnect, I want to pay attention to 4383 on the S&P 500. Now, when you look at the weekly time frame, the 5 EMA is at 4479, and then the 10 EMA, which we've tagged that multiple times, is at 4421. So once again, 4383 is the 5 monthly, and then for the 10, it's 4421. So not off by too much. Let's hop into the daily time frame though, so you can get a better idea as to where I would expect to see the market bounce back up again. And that would be right here at the lower Bollinger Band, the 50-day moving average, and the lower trend line right here. It's all in confluence right at around where? Well, just under 4,400, which also lines up with not too far off from the 10 EMA right here, and then also the monthly 5 EMA right there. So there's a lot of confluence for support there. So if we do start seeing the daily time frame pull back down, I think that this is going to be a buying opportunity up until unless something crazy happens. That to me still, you got to give benefit to the bulls. The 50-day moving average has been bought up. So if we come down there, just be prepared. Take a trade, right? That's what I'm going to be looking for a trade to take. And even if it starts rolling over on me, it's not really a big deal because I'm looking at risk to reward and measuring position sizes accordingly. Now let's take a look at volatility. Volatility broke out of this wedge we were tracking and well-formed another wedge as the Bollinger Bands are contracting tightly. So this is setting itself up to maybe potentially get a little vol spike to potentially fill this gap right at around 1850. I don't know if that's going to be enough to take us to the lower Bollinger Band, but we'll monitor that. And if you take a look at the VIX on the weekly time frame, we put in a little bit of a hammer candle while we're just kind of compressed right in the middle of the Bollinger Bands as the Bollinger Bands are pretty tightly contracted. And as we know, contractions can lead to expansions. Russell 2000. Weekly time frame, okay, small caps. Are small caps going to start getting a bid? Are they going to start breaking out of this trend? Well, a good start so far, right, in August going into September. You can see here that we just tag this lower trend line and we're starting to rip higher, but it's not out of the woods yet by any means. A good note is we're back above the the weekly 5 EMA. The PMO is starting to curl itself over slightly. From a bearish perspective, though, it is still bearish context, pointing down. We haven't broke out of this range yet, and our volatility is still rather high. So that is something to pay close attention to. And if you look at the daily time frame, bullish perspective, the PMO is now back above zero. It hasn't been there for quite some time, and it's in bullish context. We bounced pretty significantly from the 200-day moving average, and we're back above all these key moving averages right here, the 50, the 100, and the 20. Meanwhile, the 20 is starting to curl itself back up as price is trying to get back to this upper range right here. Typically, you have an aggressive move to the upper range. You typically get some sort of digestion, and then we got to watch for that breakout. But as it stands right now, the trade's not really there yet, but if we have a catch-up play, right? If small caps have to catch up, if breadth starts coming back into the market, that can bring the market higher, obviously, right? So that's something to pay very close attention to. Let's look at the Nasdaq 100. Nasdaq is tagging its upper weekly trend line right over here. It's it's above the weekly 5 EMA. Things are looking very bullish. I would say the volatility pattern is still very tightly contracted right here, as you see a falling wedge, falling wedge, falling wedge, rising, 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 and you can see how when it breaks out. So it's something to pay attention to, something to watch. But as it stands right now, prices on the weekly time frame, pretty frothy, right? It got pretty frothy over there looking at the RSI, and then also it's tagging the upper Bollinger Band, which can act as resistance, and then also a trend line up here too. So that's something obviously to pay attention to. And if you look at the VXN, which is the Nasdaq 100 Volatility Index, you can see here a green candle in the week. It was an inside trading week, and we're right there at about the lower range of the Bollinger Band as the price is getting, the Bollinger Bands are getting contracted. One thing that I do want to call out that I've noticed is we're putting in lower, kind of just moving slightly down like this, lower lows, but the RSI has been kind of putting in higher lows. So on the weekly time frame, that's a divergence taking place, a positive divergence, where that might very well take us to the upper range here in the next couple of weeks. So that's also something to very, very well pay attention to, is Russell Vol. Let's take a look at the Nasdaq 100 on the daily time frame. Daily time frame, all moving averages flowing very nicely from the bottom left to the top right. Looks bullish. All right, upper Bollinger Band, RSI, it's getting up there. That just shows that there's a lot of strength. If we pull back, where should we look? Well, we should probably look right at around 15,200 to just above that, 15,263, which is the 20-day moving average. So if we saw a big move up, maybe perhaps we come test this previous resistance, and that resistance could then potentially become support as it's in confluence with other moving averages. So that is one that I'll be paying close attention to. And if you take a look at the BP NDX, we talked about this on the previous episode. You can see here it's been putting in a high, a lower high, a lower high. And if this breaks out, we're going to get some sort of breath of fresh air here up to the Nasdaq, where we might see tech stocks continue to rip. And I'm going to be paying attention to see when the RSI gets into that overbought territory, if that's the case. This happened going into September to October of the previous year, and you can see here the Nasdaq 100, we saw that kind of blow off top, and then it reverted completely. Then everyone got really excited. Then it reverted again, and everyone was just kind of all over the place for that period of time. Well, we're back in that period of time based on seasonality, but we haven't seen any sort of weakness as of yet. Let's look at some 15-minute levels going into just next week. So S&P 500, the SPY, I'm looking at 447 on the 15-minute time frame as an area of support. If we pull back into that, that can offer up a good risk to reward. And then right below that, we have a gap. And gaps, if they're filled, they can also act as an area of support. So that is another one to be watching. Meanwhile, we broke out of this rising wedge, and we've been just trending sideways right here. So like nothing, right? So we really didn't do anything for 1, 2, 3, 4, 5 days. Not a dang thing. Okay, the Dow Jones Industrial Average, DIA, I'm going to look at that on the 15-minute time frame. We've been doing absolutely nothing here for multiple 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days. I mean, even more. I mean, you can go back even further. We have a gap above us, that's resistance. We have a gap below us, that's support. Those are the key levels I'm watching. That's 351, 351.50, and then up overhead is 356. So if we break out of that area, look for maybe potentially a retest and then move higher. If we break down from this area, look for a potential test of these lower ranges right around 348 to 346. Okay, the Qs, 15-minute time frame. Like I said, pay attention to see if we start falling going into obviously next week. But if we do fall, there's going to be opportunities. Where's that opportunity going to be for buying the potential dip? Well, we have a gap right here at 368, and we have a volume shelf profile right here, which obviously can act as a level of support, which is, 366, 367, 368, that kind of zone in here can very well get bought back up. We did crack through this trend line, and obviously still diverging here on the RSI and the PMO, but overall in good context, right? The 5-day moving average is sloping up. The 5-day moving average on the 15-minute time frame is the 130 period moving average, and it's holding as support. So if we start cracking below that, maybe get below 379, then I could see that this could start rolling over a little bit. There's other short-term areas of support, for example, like 375. So if you want to set up trades around there, you can do that as well. 15-minute time frame for the IWM. I'm looking at 224 as an area of support. Why? Well, volume shelf profile and act as resistance here, 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 kind of just throughout this range, and then right here, and then it acts as support. So if we come down in that area, we can very well bounce from those levels. So that's something to pay attention to. IYT, this is transportations. If you follow Dow theory, follow transportations, obviously, right? Industrials and transports. Support for me, 251.50 to 251. That's right around the volume shelf profile. If transportation starts catching a bid, I saw some interesting stuff with like an airline. I think it was LUV. Some interesting options activity taking place where it was getting just like 4,000 contracts or something like that. I forget which date exactly, so I can't go over it quite because I don't have it in front of me. But I found that to be interesting. So maybe potentially watch airlines. Maybe there's something going on there. They've got beaten up on Friday, so perhaps, hey, who knows? Maybe we'll catch a bid there in airlines here. But transportations, I'm looking at around 251 to 251.50. You can see that we haven't gone anywhere. It's just been a chop fest. But if we do pull down in that area, there's a volume shelf profile, and there's previous resistance and support in those areas. All right, everybody. So just to kind of wrap up the thoughts, obviously it was just a very overall interesting week. We got the jobs report. It's horrible. The dollar is breaking down. Where can we potentially position ourselves? Well, as it stands right now, we need some time to pass. We need to see what Tuesday brings for us. From a dollar perspective, when you look at this inverse correlationship, if the dollar does start bouncing from this area, I would expect the S&P 500 to take a little bit of a breather, and that's why I'm kind of just paying attention to those key levels. And then from my portfolio perspective, I'm probably going to be updating some stop losses on various positions that I'm in, just in case. And then I'm looking to buy potentially new setups if the S&P 500 pulls back down into around that 50-day moving average. That's all I got for you, everybody. Have a wonderful Labor Day weekend.